Is another crypto exchange facing a risk of liquidation? Is Coinbase leaving the US markets? Why is Binance liquidating this stablecoin? And why did this mysterious whale burn $4.5 million worth of Ethereum? This is your Altcoin Buzz news. Hey, what's up everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when we drop our latest content. Follow us on Twitter, AltcoinBuzzIO, and as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. Bitcoin starts the second week of August with barely a sound as a range-bound Bitcoin price behavior continues. After one of its least volatile weekly closes, Bitcoin remains stuck at $29,000. For traders, this risks lower levels entering next, as bulls lack the momentum to beat out any selling pressure below the key resistance levels of 29,250, 29,500, and 30,000. Trader and analyst Rett Capital summarized by saying, Bitcoin continues to reject at 29,250. As long as that continues, bias favors to lower prices. Michael Vanderpump, founder and CEO of trading firm 8, suggests that Monday could provide a local low for Bitcoin to act upon throughout the week. Monday coming up, usually a day that Bitcoin makes its standard drop, in that case, targeting 28K to bid. He added, if we don't drop to that region, then I clearly want to see a break above 29,700 to add on to my longs. With Bitcoin's volatility at its lowest level since early January, I think we'll soon see a big move in one direction or the other, and based on how Bitcoin was unable to break 32K even with the XRP news and the Bitcoin ETF news, I think it will most likely be down. Brian Armstrong, the CEO of Coinbase, has reportedly given a mixed response about whether the cryptocurrency exchange plans to leave the United States amid regulatory uncertainty. According to an August 4th report from the Financial Times, Armstrong said Coinbase was staying in the United States despite many other crypto firms considering leaving the country over the potential threat of legal action from the federal regulators. Coinbase currently faces a lawsuit from the United States Securities and Exchange Commission, as well as scrutiny from 10 state regulators, many of whom issued cease and desist orders on the exchange's staking services. The Coinbase CEO reportedly said leaving the United States was not even in the realm of possibility right now. However, at a fintech event in London in April, Armstrong reportedly said the exchange might consider relocating its headquarters from the US to a more crypto-friendly country due to the lack of regulatory clarity. He later told shareholders that Coinbase was 100% committed to the US market in the long term. Coinbase also shared its second quarter results on August 3rd. Despite showing a net loss, some positives emerged, like a 13% cut in operating expenses from the last quarter and a 3% boost in cash reserves to $5.5 billion. During Coinbase's Q2 earnings call on Thursday, chief and founder Brian Armstrong stammered a reply to a question about stablecoin USDC, unexpectedly revealing that its market cap had gone up after Binance sold all of its holdings. Armstrong said that the USDC market cap is up after Binance pulled out, implying that the crypto exchange Binance was a holder of Circle and that USDC is safer now that Binance no longer holds the stablecoin. At the same time, CZ, the CEO of the world's largest crypto exchange Binance, took aim at USDT for an apparent lack of transparency when it comes to financial records. In a Monday AMA session on Twitter Spaces, CZ said that he'd never personally seen any audit reports on USDT, despite his position as the largest stablecoin by market cap. He said, so USDT is kind of a black box, and because we don't know, there's certainly a level of risk. He went on to note that a perceived need for an audited centralized stablecoin was the reason behind Binance's decision to partner with Paxos to issue the Binance USD stablecoin. CZ said, although the New York financial regulator has now shut down BUSD, the fact that the wind down process is very orderly shows that all assets are there. CZ has revealed plans to add more stablecoins on the platform, and recently on July 26th, the exchange listed a new stablecoin called First Digital USD or FDUSD, and CZ mentioned that other stablecoins based on the US dollar will be added soon. Now, the CTO of Tether, the company behind USDT, wrote on Twitter saying that isn't it interesting that USDT is being pressured down slightly within 10 basis points just to push the market makers to react, and USDC, the main competitor that you would expect to be gaining from this situation, is redeeming heavily nonetheless, while suddenly a competitor born 2 days ago is getting it all. It feels definitely organic and not manipulative at all. Some people never learn. Global payments giant PayPal is entering the cryptocurrency market with its own US dollar pegged stablecoin, PayPal USD or PYUSD, the company announced today. The Ethereum-based token will soon be available to PayPal users in the US and is the first time a major financial company is issuing its own stablecoin. Users can transfer PYUSD between PayPal and supported external wallets, fund goods and services purchases, or convert any of PayPal's supported cryptocurrencies to and from PYUSD. PayPal said the stablecoin will be available to an already large and growing community of external developers, wallets, and Web3 applications, and can be easily adopted by crypto exchanges. Now, the interesting part is that PYUSD is issued by New York-based crypto financial services firm Paxos, the one that previously supported BUSD, and fully backed by US dollar deposits. They say it is redeemable for dollars at all times and can be also exchanged for other cryptocurrencies available on PayPal's network, such as Bitcoin, Bitcoin Cash, Ether, and Litecoin. PYUSD will be first available on PayPal's popular payments app Venmo. Meanwhile, PayPal said it would provide reports of funds back in the stablecoin in an effort to thwart concerns about unbacked tokens. Beginning in September 2023, Paxos will publish a public monthly reserve report for PayPal USD that outlines the instruments composing of the reserves. The Huobi cryptocurrency exchange has been hit with outflows totaling a staggering $64 million this past weekend, continuing a long decline in the total value locked on the exchange to $2.5 billion from $3 billion a month ago, according to DeFi Llama. Adam Cochran, who's a fintech executive, angel investor, and crypto Twitter analyst, recently raised eyebrows with a series of statements regarding the apparent financial instability of Huobi. He reported that global crypto exchange Binance had commenced the bulk sale of Tether USDT, a leading stablecoin. Cochran said, "Why is Tether selling off? Likely due to Huobi's insolvency," later adding that there had been weird balance shifts at Huobi over the past month. Cochran connected these observations with recent rumors that Huobi executives and personnel from Tron, a blockchain from Justin Sun, were questioned by police. He theorized by saying, "I think Binance is selling their Tether for two reasons. They want to topple USDT to push stablecoins that they can control and gain from, or they realize that Justin Sun does not have the USDT he claims to, and if users find out, they might mass dump to escape his exchange." Cochran then broke down his understanding of Huobi's holdings. Across USDT and USDC combined, Huobi only holds $90 million of assets. Huobi's own Merkle Tree audit still lists that Huobi users have $630 million of USDT held and a wallet balance of $631 million of USDT. Users think that they have a balance of $631 million in Huobi, but there's only $90 million there. Cochran theorized that the missing funds are being used to prop up the yields of Tron, Polynex, and other DeFi apps operated by Justin Sun. But even those amounts suggest that Justin Sun only seems to have about half of the total obligations for Huobi. Following these claims, the exchange's head of social media responded on Twitter saying, "The report of police involvement has been pure rumors," and asserting that all operations have been normal as usual at Huobi. Cochran stood his ground, revealing that the source is a senior executive at Tron who has firsthand knowledge of the investigation and has been at Tron for many years. He concluded saying, "Whether you've been informed or not, your colleagues are currently under criminal investigation." Huobi denied these allegations, to which Adam responded, "Did you expect Justin Sun to be like, oh yeah, we're insolvent? People lie, blockchains don't." Now, in my opinion, it's hard to know what's happening fully behind the scenes, but if I had funds on Huobi or any other exchange with this amount of attention for this reason, I would be taking my funds off the exchange until there's a better understanding. At the same time, you also have to take into account that Adam writes one of these threads pretty much every other day, so while he may be right, these things do take time to play out, so just because he wrote it now doesn't mean that the exchange is going to fall this week. It could happen in months or never, and the exchange is actually fully solvent. Ethereum's blockchain community is abuzz with speculation and confusion after a mysterious incident involving the burning of $4.5 million worth of ETH. On July 26, a person named ND4.ETH sent a staggering 2,500 ETH to a burn address, effectively removing the coins from circulation. The act of burning tokens is not uncommon in the world of crypto, as it's often used to reduce the total supply of the token and potentially increase the value. However, what sets this incident apart is the lack of a clear motive behind such a significant Ethereum burn. As of now, the identity and intentions of the sender remain shrouded in mystery. On-chain analysts at Looks On-Chain have shed light on the sender's holdings. The individual holds over 34,000 GMX tokens worth approximately $1.84 million and 311,000 Gains tokens valued around $1.43 million. In a further perplexing move, they also sent an additional 1.5 ETH, 34.9 GMX, and 600 GNS tokens, collectively worth about $7,000 to the same burn address. This act has raised questions about the motives behind burning such a substantial amount of ETH. Some speculate that it could be a form of protest, an unconventional attempt to increase the value of other tokens held by the sender, or simply an experiment in the world of blockchain and cryptocurrencies. WhaleChart on Twitter suggested that the whale sent the ETH to the burn address after finding out that his girlfriend cheated on him, which if that's really the case, then that's unfortunate and I hope he's okay, but who really knows what's happening? What are your thoughts on this, and why would he burn over $4.5 million? That's it for Altcoin Buzz News Update. I'm your host, Cody Buffington. Thanks for watching.